Hello everyone, we are going to discuss about the previous year question of Corporate Accounting 2 from University of Madras in April 2012, Part C. This question is from Alteration of Share Capital and Internal Reconstruction chapter. Let me read the question. The following is the balance sheet of Excel Limited as on 31st December 2009. In liability side, under the liability, share capital 6,000, 6% preference shares of rupees 100 each. The amount of preference share is rupees 6 lakhs, and 12,000 equity shares of rupees 100 each. The amount of equity share capital is rupees 12 lakhs. And 8% debentures rupees 3 lakhs, bank overdraft rupees 3 lakhs, sundry creditors rupees 1,50,000. The liabilities totals are 25,50,000. And in the asset side, under the assets, goodwill rupees 45,000, land and buildings rupees 6 lakhs, plant and machinery rupees 9 lakhs, stock 1,30,000, debtors 1,40,000, cash 15,000, profit and loss account rupees 7 lakhs, preliminary expenses rupees 20,000. The asset side total is rupees 25,50,000. And look at the adjustment. On the above date, the company adopted the following scheme of reconstruction. And the first point, the equity shares are to be reduced to shares of rupees 40 each, fully paid, and the preference shares to be reduced to fully paid shares at rupees 75 each. And the second point, the debentures holders took over stock and debtors in full satisfaction of their claims. And the third point, the fixed and intangible assets are to be eliminated. The expenses of reconstruction amounted to rupees 5,000. Give journal entries incorporation the above scheme of reconstruction and prepare the reconstructed balance sheet as well. And based on this information, we are going to find out the capital reduction value and share capital value. Then we are going to find out the new and adjusted balance sheet. Before going to find out the answer, first we should know these are the things. Look at the notes. The first one is capital reduction. It means the company shares, both preference shares and equity shares value and shares price will be reduced. As well, its debentures value, debentures price will be reduced. And fixed assets value appreciation or increase. It is also known as internal reconstruction. And the second thing is fixed assets. Fixed assets equal to preliminary expenses plus discount on issue of shares and discount on issue of debentures plus underwriting commissions plus asset side profit and loss account plus foundation expenses, etc. And the third point is intangible assets. Intangible assets equal to goodwill, patent and copyrights plus industrial design rights also. First, we are going to find out the journal entries. In the books of Excel Limited journal entries, date column, particulars column, debit side column and credit side column. The first journal entry is for reducing the company's share capitals from rupees 100 into rupees 40, and also we are going to find out the capital reduction value. First we have to mention the equity share capital, account data, it's the old value. It means that as per the balance sheet value, the number of equity share capital is 12,000 and the price of equity share capital is 100. So the total amount of equity share capital old value is 12 lakhs. It means 12,000 multiply with 100. And to equity share capital account creditor, it's the new value. As per the adjustment, the company is going to reduce its share capital price rupees 100 into rupees 40, but there is no any changes in the number of equity shares. So the new equity share capital value is rupees 4,80,000. It means 12,000 multiply with 40. Which we have to mention in the credit side. The old value of equity share capital, which we have to mention in the debit side. The new value of equity share capital, which we have to mention in the credit side. And the difference value is in the credit side is called capital reduction. It means 12 lakhs minus 4,80,000. We get the difference value is 7,20,000. That is capital reduction, which we have to mention in the credit side. So in narration, the company is going reduce its shares price rupees 100 into 40. So actually the company has reduced its share capital from 100 to 40, and also we found the capital reduction value. And the second category, 6% preference share capital account data. So as per the balance sheet, the number of preference share capital is 6,000 and the price of preference share capital is rupees 100. So the amount of preference share capital is rupees 6 lakhs. So 6,000 multiply with 100, we get 6 lakhs. That is preference share capital's value. That is old value. Then the second to 6% preference share capital account new. There is no any changes in the number of preference share capital, but the price will be changed from 100 to 75. So the value of new preference share capital is 4,50,000. It means 6,000 multiply with 75. And the difference value is in the credit side is 1,50,000. That is called a capital reduction account. It means 6 lakhs minus 4,50,000, we get 1,50,000 is the difference value, and that is in the credit side. And in narration, being the company reduced its preference share capital price rupees 100 into rupees 75, and also we found capital reduction amount. And the third journal entry, in the debit side, land and building account data new. It means the land and buildings value has increased or appreciated with 30%. So that is why the existing value of land and building is 6 lakhs multiply with 130 divided by 100. It means we have added 30% extra in the existing value of land and buildings. So that is why 6 lakhs multiply with 130 divided by 100. So the new value of land and building is amount is 7,80,000, which we have to mention in the debit side. And to land and building account old value, as per the balance sheet, the amount is rupees 6 lakhs, which is mentioned in the credit side. If there is any changes in the liability side items like share capital, equity share capital and preference share capital and debentures value for calculating the capital reduction, the old value will be mentioned in the debit side. But in case of if there is any changes in the asset side items like fixed assets or any other assets, the new value will be mentioned in the debit side. So it's like a opposite manner. So in case of when we are going to find out the capital reduction value in the asset side items, the new value will be mentioned in the debit side and the old value will be mentioned in the credit side. It is just like vice versa. And so the difference value is in the credit side, that is called the capital reduction. It means 7,80,000 minus 6 lakhs, we get 1,80,000. And being the company's land and buildings value has increased by 30% and we found capital reduction. And the fourth journal entry, in debit side 8% debentures account data, to stock account creditor 1,30,000, to debtors account creditors 1,40,000. And the difference value is in the credit side, that is 30,000, that is called capital reduction. It means 3 lakhs minus 2,70,000. In bracket, being the company has given its stock and debentures to its debentures holder account to settle its dues, and also we found capital reduction. It means the debenture holders took over the company stock and debtors value for compensating their dues. The left value will be called as a capital reduction. And the fifth journal entry, for making payment for settling the reconstruction expenses. So in the debit side we have to mention reconstruction expenses account data. The amount is rupees 5,000 and to bank account creditor 5,000. It means being paid reconstruction expenses by the company. And the fifth journal entry, for making adjustment against the capital reduction total amount with return of fixed assets and intangible assets. If there is any value or balance that will be transferred to the capital reserve account. So in this manner, capital reduction account data. So we have already calculated different amounts of capital reduction. So 1,50,000 plus 7,20,000 plus 30,000 plus 1,80,000. The total capital reduction amount is 10,80,000. So which we have to mention in the debit side. Then we are going to adjust all the company's fixed assets and intangible assets. To goodwill account creditor 45,000. To profit and loss account asset side items, the amount is rupees 7 lakh. To preliminary expenses rupees 20,000. To plant and machinery account depreciation. So the actual value of plant and machinery is 9 lakhs. Multiply with 30 divided by 100, we get the depreciation value of plant and machinery is 2,70,000, which we have to mention in the credit side. And to reconstruction expenses, that amount also we have to adjust with the capital reduction value. So to reconstruction expenses account creditor rupees 5,000. After mentioning this information, so we need to tally for both sides. The difference value is in the credit side is 40,000, that is called the capital reserve account. It means the balance value will be transferred to the capital reduction account after adjusting these are the things with the capital reduction value. So it means 10,80,000 minus 45,000, 7,20,000, 2,70,000 and 5,000. After adjusting this amount with the total capital reduction value, we get the difference value of 40,000. That is capital risk, which is transferred to the balance sheet in the liability side. And then we are going to prepare the notes to accounts for preparing balance sheet. The note number 1 is share capital. Under the share capital, issued and paid up capital, the new equity share capital is 4,80,000. It means 12,000 multiplied with 40. So we get the new share capital amount of 4,80,000. And 6% preference share capital is 4,50,000. It means that it is also the new preference share capital. So it means 6 lakhs multiply with 75. We get 4,50,000 as the new preference share capital amount. Then we have to add this amount. We get the total amount of 9,30,000. That is the total share capital value. And the second note number is reserve and surplus. Under the reserve and surplus, we have to mention the capital reserve, which we have already found. The amount is rupees 40,000. And the note number 3 is trade payable. Under the trade payable, we have to mention the sundry creditors. The value is rupees 1,50,000, which is from the costing. And the note number 4 is short-term borrowings. Under the short-term borrowings, we have to mention the bank's overdraft. The amount is rupees 3 lakhs, which is from the costing. And note number 5 is tangible assets. Under the tangible assets, we have to mention land and building. The value has been appreciated with 30%. So the original value of land and building is 6 lakhs. Multiply with 100 plus 30 divided by 100. It means 6 lakhs multiply with 130 divided by 100. We get 7 lakhs 80,000. It means we are going to add 30% extra with the existing value of land and buildings. And plant and machinery depreciation, it means we are going to reduce 30% value from the existing value of plant and machinery. So the old value of plant and machinery is 9 lakhs. Multiply with 100 minus 30 divided by 100. It means 9 lakhs multiply with 70 divided by 100. We get 6 lakhs 30,000. So we are going to reduce 30% value of the plant and machinery amount. Then we have to add this amount 7 lakh 80,000 plus 6 lakh 30,000. We get the total value of 14 lakh 10,000. That is the total tangible assets. And then we are going to prepare the balance sheet of Excel Limited as on the date of 31st December 2009. First we have to frame a particular column and a note number column and a rupees column. So in particular column, first we have to mention equity and liability. Under the equity and liability, we have to mention shareholders funds. Under the shareholder fund, we have to mention the share capital. That is note number 1's heading. And the number 1 will be mentioned in the note number column. And the total value of note number 1 amount is rupees 9,30,000. That is mentioned in the rupees column. And the reserve and surplus is note number second's heading, and number 2 will be mentioned in the note number column, and note number 2 total will be mentioned in the rupees column, that is 40,000. And the non-current liabilities are nil, and the current liabilities, under the current liabilities we have to mention the trade payable, that is note number third's heading, and number 3 will be mentioned in the note number column, and the note number 3 total is 1,50,000, that is mentioned in the rupees column. And short-term borrowings, that is note number 4th heading, and number 4 will be mentioned in the note number column, and the note number 4th total is 3 lakhs, that is in the rupees column. After mentioning this amount, we have to add this amount, so the total value will be 14 lakhs 20,000. It means 9 lakh 30,000 plus 40,000 plus 1 lakh 50,000 plus 3 lakhs. And the Roman letter 2 is assets. So under the assets we have to mention non-current assets. Under the non-current assets we have to mention tangible assets, that is note number 5th heading, and number 5 will be mentioned in the note number column, and note number 5th total is 14 lakhs 10,000, which we have to mention in the rupees column. And intangible assets nil, and current assets, under the current assets we have to mention the cash value. So as per the balance sheet, the cash value is 15,000. Then we have to adjust the liquidation, not liquidation value, reconstruction expenses amount will be adjusted with the cash balance. So 15,000 minus 5,000, we get 10,000 is the cash balance. which we have to mention in the rupees column. Then we have to add all the assets items. It means 14 lakhs 10,000 plus 10,000 we get 14 lakhs 20,000, that is a total assets value. That's all.